Very good question. So, how do you fix a specific risk premium for a company? Friends, remember that is where we will have to use as valuation professional our experience, our expertise, our exposure, and our judgment in deciding as to what can be specific risk premium. So obviously, firstly you will need to identify as to what are the risks which are applicable to this entity, which are extraordinary, and in that case there is no set rule for deciding as to what can be the specific risk premium. It will need to be based on the judgment of the valuation professional, and only thing that he has to remember that whatever figure that he arrives at, he should be able to substantiate. Please remember, substantiate when, not in future, substantiate today. So when as a valuation professional you are picking any figure for the specific risk premium, find out as to what those specific risks that you are talking about. Use your experience, your judgment, your expertise, and document it. That for this valuation, for the valuation of this entity, in my understanding, following are the specific risks applicable to this entity. Based on my understanding, judgment, experience, and expertise, and taking the following factors into account, I think a risk premium of 3%, 2%, 4%, 5%, as the case may be, can be or should be added uh, to the cost of capital. So this is how you can arrive at uh, the specific risk premium depending on the situation that you are in.